Hello everyone, welcome to the Ichimoku daily analysis for the Euro US dollar FX for Tuesday, June the 16th. Well, a very interesting day in this market today. No follow through of the bearishness that we saw over the last few days. The previous day we had a very, very large red candle and we just took out the neckline of the head and shoulders pattern and we closed just below that area that was a previous resistance area, which has turned into support just there. So the bearishness has evaporated, but there really wasn't a lot of bullishness either. Now, if we look at the trend is still down. We still have a first time frame downtrend. We have a lower high and a lower low. So what we'd like to see for the trend to continue down is bearishness. Now, we had a green candle, which means that the bulls made net gain on the day. Now, what sort of gain did they make? What was the quality of that gain? Well, if we look at where the market closed, it closed near the center of the range for the day. And that means that neither the bulls nor the bears had control when the market closed. It also means that neither of them showed any commitment to pushing the market higher or lower. During the day, there was a great battle going on, as evidenced by the wicks or the shadows, and we can see that the market tried to traded down below the low of the previous day, which is good if we're bearish, but then traded just below, and buyers came in and bought the market. Then, if we look at the long shadow on the top, we can see selling pressure as well. So the bulls tried to push the market up, but the sellers came in again. But the sellers weren't strong enough to close the market down near the lows, and the bulls weren't strong enough to close the market up near the highs. So very, very indecisive. So when we see these very small body candles as well, that's not a very positive sign for either side. So what you'd want to see for the downtrend to continue would be a fairly large body and a red body, so not very positive. So now it throws some doubt into whether this head and shoulders pattern will continue down on its way. We had the breakout, but it wasn't a very strong close, and we like to see a strong close down below the neckline. So we haven't seen that yet, and interestingly, we've closed just back up above the neckline. Although we have to remember the trend is your friend, and the trend in the first time frame is still down. So it makes the low of the current candle very, very important for this market. Now, one interesting thing to look at is this area around here, which was a previous area of resistance. If the market does continue down on its downtrend, we've got this area here. Now we know the previous areas of resistance can turn into support, and that is a very strong possibility for this market if it does continue down in the downtrend. That may have been why this market was bought, as it tried to approach this area. It's very close to this area. If we look here, for this price rejection up here, it's even closer. And we know that support or resistance acts within a zone. So that could be a very, very good reason why the market was bought up here. So as well as the low of the current candle being important, this zone here, a strong close down below this previous resistance area, is probably even more important for the market. If we do take out that area, then the swing low here becomes important. That's the next area of support. And then the top of the cloud, or the Kumo, which is roughly about 134. Now, we're still trading down below both of the indicator lines here, the Kijun-sen and the Tenkan-sen, which is fairly bearish, but we're still trading up above the cloud. So trading up above the cloud is bullish. So what we're seeing is just a retracement of this higher time frame uptrend. Now, interestingly, if we look at the configuration of the peaks and troughs, we have a series of higher peaks and higher troughs. And if we look here, we had a lower peak, and once we took out that swing trough there, which was yesterday, we had a second time frame downtrend, which is very, very important for this market. So a change of trend from this area where the trend started, the trend actually, we could say that it began roughly there, So quite a change of character for this market. So there is every strong chance that the market will trend down to around this support area or the Kumo. Looking at the Tenkan-sen here, it's turned down very sharply, which means that the market has a lot of downside momentum as well. So it wouldn't surprise if we do rally. It wouldn't surprise if we held at the Tenkan-sen as some sort of resistance. And as traders, what we should do is look at how the market reacts when it trades to around there. If it does turn quite negative, and we have some bearish candles, then it is a good opportunity to go short for this area to be taken out. But just to go back on what I've said previously, the current low of the current candle is very important for this market over the next few days, but also this zone here, this zone of previous downside price rejection, may become an area of support, so we need to trade down through there very solidly.